Good day, all. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up, and this is for Monday, and we are now at the 12th of July, 2021. I'm going to be holding my What's Up live webinar this Wednesday. It'll open at 12:15. If you're on my mailing list, your first mailing went out today. I'll do another one in a day or so, and then that's it. So I hope to see you there this Wednesday, 12:15 p.m. Central Time. Your invite, by the way, includes where to email me now, any questions you might have. And when you sign up, you'll get another reminder of that from us in the sign-up email. So let's talk about what we've got here. As you take a look at everything, AMC down again. Surprising, too, because Black Widow did so well at the shows. If you look at PODX is back down, but interesting day when we see that chart, ARC backing off. So we're seeing the tech back off a little bit here, which is interesting. But as a whole, DIA, SPY, QQQ, and XLC, well, those three at least are up. Metal markets down, and I'm noticing that interest rates are climbing again, and the market's breathing a sigh of relief. They're not climbing sharply, but remember, we're going to get a CPI number tomorrow, and that CPI number that comes out in the morning, it's either going to be good or bad. I know they're looking for about a 0.5 percentage point gain in the CPI in June over May, so let's see how that does come out. When you look at the ARC investment, you can see how you came up, you filled a couple of gaps, one that was here, one that was here, and the market bounced again. But what is the trend? The trend is defined by the swing line. It's got a pattern of lower highs, lower lows. That's a downtrend. The market is fighting a battle at the 18-day moving average of closes, the 100 and the 200. Look at how they all come in right there. So fascinating. So the market's got an upside bias since price is trading over the 18-day average. I define bias by that. And bias is a filter on the swing line. So even though the trend is down on the swing line, when the bias is up, just wash your hands. You don't have anything. When I look at Bollinger Bands, the market had ridden this Bollinger Band up. And when you lost the embedded reading, and an embedded reading happens when you get an overbought market that converts, and both numbers that make up the slow stochastic go sideways over 80. When they're doing that for several days or more, it's said to be embedded, and the market shows it by trying to rally. Now, it doesn't always stay on the upper Bollinger Band. But what does happen is when that's over, the red line will close under 80 and ideally under 79. Kiss of death is under the 79, you got it. Then it tries coming back to, generally speaking, the closest main moving average, and often it is the 18-day average of closes, and you could see that's where the market is now fighting its battle. So I think we're in a corrective state. You have to let it do its thing. When you come to the BBEU, you have a lower low, higher high pattern. You see the high, the lower low. That is not a trend. The market's now coming up to the point where it's overbought. Any reading over 70 that isn't got both numbers in the slow stochastic going sideways over 80, either one of these that would be over 70, you're overbought. Overbought market, no trend. PAVE is fighting its battle. We talked about this last week in detail. It had come down playing the battle against the 100-day and the 18. Finally, what happened on Friday is the market jumped away from those two numbers. And in the process, it made a higher high, lower low. So we had a successful test of those numbers in the sense that the support held, and today you're up again. I would look for a failure on the rally in the 26-27 area, and for more grinding, if possible, to happen in this 18 to 100-day average. You are overbought. AMC, as I said, the market is now riding the lower Bollinger Band. It's basically in a sideways pattern, trying to push that pattern to the downside. Now we'll see what happens. I think that the reality of what's going on now is everybody's looking. Reddit, drove these markets to crazy numbers. A little bit of reality's come back in. The company's been able to raise an awful lot of capital to weather storms. That's a good thing. But what is their new business model going to be? You're oversold in a bear trend. To break the bear trend, you've got to take out 48.92, but that would not create an uptrend necessarily. In XSD, this is the semiconductor. So again, we had the embedded reading. We rode the Bollinger Band. You lost the reading. And the trend to the upside ended at that point in time. And where are you going? Take a look with me to the wild side. The 18-day average and the 100 after that. And your battleground's right there. If you've taken my enhanced Bollinger Band course, this is your friend. Learn this pattern. You won't learn it from me here on these videos. I make you a promise. I don't teach the parts of this here. It's a short course. I think there's 8 or so videos, 13 maybe there are. And each one's about 5 minutes long. I walk you through, I teach you. I don't care if it's a spider ETF or any of the other parts. I think you're going to learn something and see Bollinger Bands in a way you've never seen them, but I tie them together with slow stochastics. In the PODX, all right, PODX, hard to press this market into a lower Bollinger Band that want to be a short. It is embedded. Embedded means that each time it's lifting its head until the red number closes over 21, I think the pros are hitting this market on the short side. So you can get bounces here, but I think they're short-lived until we see just what happens with the market with the slow stochastic. That keeps me in the bear camp. The flip-flop is true of ESGU. So if you look at this, you've got the bullish embedded reading. I've been telling you buy on these breaks. I think that's what the pros are doing. And I think they'll be getting themselves out of these positions in between here and the upper Bollinger Band. There's another number called a window envelope. I cover those in my morning paid subscriber videos. A lot more information in those because I'm going over and over what I teach in my charting courses for you in that, and I try to drill it at home into your brain there. All right, XLE, lower highs, lower lows. We still don't have any word at all from OPEC Plus on what they're doing this week. Now, we're going to get the EIA and then the OPEC reports on what they forecast as demand in the market right now. They'll give us an idea of their current supply situation. So are we going to be running at a deficit? What's going to be happening there? But the real story is one, what's going to happen? It could just sit like this. I doubt it. Somebody's going to start pumping oil if there's no restraint on them. And I think that right now behind closed doors, I think OPEC Plus is saying to its members, do nothing until we know the final end. We'll keep you informed with what we do with the UAE about their demand of a higher baseline. So trend down, support substantial at the 100-day and the lower Bollinger Band. You've bounced away from it. You're getting the market out of an oversold condition. I think you attract sellers at 53.78. I think the stop would be right over here, that 55.27 by a lot of the pros, and we'll see if they can drive the market back down there. I don't know if it'll get up to that price, but this market still looks to me bearish. EFA, the emerging market, aha! Look what the market did last week. This is a great looky-see. You got down to the 100-day average, the lower Bollinger Band for the first time. I yell, scream, you know me. That is where I think the pros got completely, 100% out of the market. Why? Oversold down to major support. Doesn't mean you can't go lower, but that's where the percentage play is to not be playing the short side anymore. You came up on the market on Friday, and today you're following through a bit. It's not in an uptrend. More important, it's no longer in a downtrend. In GLD, there is no trend. You have a higher high, lower low. Look at how the market is fighting between the 18-day average of close in the red, and then the green is the 100-day. Also, you had a bearish crossover. I pointed that out to you last week when this was happening. Right here, watch the red get under the green. But price is over both, so you don't get the impact of that in the market. It's just noise with moving averages at this point as long as it stays like that. I think any attempt at a rally is going to be severely limited at the 170, 143, the 200-day average, and the upper Bollinger Band at 170.39. And I think the downside, you got to prove that you're going to get through that support. It's an ugly chart. The gold miners a little easier in terms of the market keeps failing at the 18-day average of closes. We've had a bear market rally, as I call it. You're not out of that by any stretch. Now you have a pattern of higher lows, higher highs. Well, tomorrow, if you don't take out today's high, you're actually going to have lower highs and higher lows until you take out this number. But even if you went for 33.39, I'd never tell a client to sell into a lower Bollinger Band. This is just plain a difficult chart. TLT, I feel great. First challenge of the 200-day moving average and the upper Bollinger Band. I know what I said. It's out there. I don't take down the YouTube videos. That's where I think the pros are taking money off the table. You got through it the next day, not unusual. Then the correction began. So now what you have is a pattern of lower highs, lower lows, momentum turning down, but you are over the 18-day average, so the bias is up. Again, nothing to trade off of, but that uptrend is over. Now the question is, can you get a real downtrend going where everything fits in? Not yet. FXE is still in a downtrend in terms of lower highs, lower lows, but momentum is pointing up. You lost an embedded reading. Often, I'm going to repeat that key word here, often, that means the market's going to try to make a run for the 18-day average of closes, the closest moving average. We'll see if that turns out to be the case or not. So you put it all together, you try to come up with a game plan, and that's exactly what we do. Now I want to remind you that one of the things I do is I put out Saturdays, a weekly edition for my subscribers. I'm talking my paid subscribers, of only weekly charts. In the days Monday through Friday, I cover all these markets for you. There's 40 plus markets that I now cover. You can get an idea of what I'm covering in there, where they fit in, and I rotate these. I mean, you'll write me and say, Ira, I'd like this, and I'll look at say, okay, maybe we should take out one of these over here or add one. As you can see in others, I've added Apple. There's a whole group that I'm covering. Sometimes I'll put in a special chart, maybe Tesla because it did so well today. We'll figure that all out. But the idea there is you wake up in the morning and maybe you're saying to yourself, I have this idea, I wonder what another chartist might think of that. And very possibly I'm covering in those areas what you want covered. If I'm not, what I often do for my paid subscribers, I will get a letter from people during the day. Ira, would you run a chart on this and tell me what you think? I do it. Now, I can't do hundreds a day, but I haven't had that request. I've had a request for 10 a day, 5 a day. I can get those out as time allows me during the day. I love to do it. So I'll write that together. I'll tell you what I'm seeing. It takes no time at all. Sometimes I even make a video of it and just send you the video so you have that. I'm Ira Epstein. All you need to do is go to the website, under the word research, take a look at all our products, see if they fit in for you. Take care.